Good afternoon, traders. This is Christian from Trade Trade Group, and this is your end of day market recap for Wednesday, January 29th. Risk disclaimer in front of you. Everything that we're going through is for information purposes, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So, in a word for the day, I would say the word of the day is chop. Also, I would say, that's definitely in regards to what we heard from Mr. Jerome Powell today. Not much new information. My thought was today, I was a little bit worried about today because I thought the expectations were a little bit too high in terms of what the market was implying. And when I'm speaking about what the market is implying, Fed fund futures coming into today. Now, of course, January was a non-event in terms of what they were doing today in terms of changing interest rates, right? There was 0%, basically 0% chance of that, and they didn't do anything. But my eyes were looking at what the rest of the year is looking at. Specifically, when you look at March, coming into today, there was about a 33% chance, what Fed fund futures were implying, chance of a rate cut. So, my thought was that Powell, there's no way that they could cut interest rates with inflation is still percolating. That's basically what he said, is that we're in no rush to do anything. And the market moved down those expectations of a rate cut to more down around 19%. So that's not too high. So I think that that's a good thing, that that the expectations have moved down. The market adjusted a little bit. There was some hint, or there was the initial headline that came out about not being something about not being able to get to the target of 2%. And he later clarified in the press conference that they were just shortening the language there. So all in all, the market really didn't move too much. You could see as well from the moves for the percentage from the open, right up here in the top left, that there really wasn't much movement. So again, it may have been a little bit more of a move if the market was implying something bigger. But those expectations kind of came down a little bit and just showed that, hey, they're probably going to be hands off a little bit. I just wanted to clarify something too, because I find this stuff interesting where people's expectations are. People think, so right now the target rate is 4.5%. People have said, well, why did the Fed cut interest rates? Well, because it's a little bit about that they over tightened. Right. When inflation was really running hot, they had to yank up interest rates and do it very quickly, and probably went a little bit further back than further above than where they should have. So they're just kind of getting it back to a rate that is a little bit more um, in line. And you could see again, like, look at some of these other periods where they've brought the rate up to about over 5% to 6%. What usually followed after that? A pretty heavy correction, right? They did this in the beginning of 2000 with the dot-com bubble. Boom, it sent the market down for a year or so. They did this obviously back in 2006 to 2007 to try to get some of the to try to cool the housing market. What did they do instead? Right. And this is a combination of other things that was going on down in housing, but that was too hot. So it's just the fact, like, so I think people need to kind of get away from, like, hey, why are they cutting interest rates? Or, why did they cut interest rates? It's just because when you bring the rate up that high, it is essentially a restrictive policy. And Powell said even now where the interest rates are, they are above the neutral rate of what they deem. So there lies the situation that they're in, and that's why they've kind of brought that rate under 5. Now they're probably just stopping and standing for a little bit and saying, hey, we got to see what inflation does. And I think, again, like, I touch upon, like, politics here because we have to deal with politics when we're trading and when we're investing and so forth. But if you remember, over the last couple of years, the Fed, which controls the monetary policy and short-term interest rates, they don't control what the fiscal policy is. And for the last 4 years, we dealt with a administration that was by leaps and bounds doing all kinds of stimulus, whether and that you could see that in the government spending that was going on. So they kind of were counteracting one another. Like the Fed took people were wondering this for a while. They're like, hey, why is the market not going down when interest rates are going up? Because that's only half the equation. It's a monetary and fiscal policy. And the administration did not want to do anything to basically upset their own chances. And that's sometimes how presidents work, is they try to do favorable things. So they threw out every stimulus, even though it wasn't needed. And that basically bolstered liquidity in the market as well. So, and Janet Yellen did that as well, right? I mean, they really continue to stimulate increase debt and do all those types of things, increase the fiscal, the deficit. They ran deficits when they didn't need to. So in any event, I know some of this is controversial stuff, but it should help explain what was going on. You have to add the monetary and the fiscal together. These two were not Powell and Yellen. They were complete opposites in terms of, instead of being on the same page and trying to accomplish a goal of bringing down inflation, Powell was doing the exact opposite of what Janet Yellen was doing. So you would think that they would have got together and had a little bit of a talk about that. But in any event, that brings us to where we are now. So that was the reason why we had a pretty choppy market. You definitely have the buy the dip mentality going on in some of these names that are down. Meta initially moved down all the way down to 640. If you bought the dip, you were rewarded. Tesla moved down and now is up after hours. I think so not really moving too far. I don't know where this is going to take Tesla other than chop, but it did come down and take out a VPOC down here. There's a lot of these that we kind of look at on earnings, but look at the move back up here. Microsoft, I don't think Microsoft has come back as much, but Microsoft has been a very tough stock I really have stayed away from Microsoft because it just has been too choppy for me, too sideways. I guess you could trade the edges here, but buy the dip, sell the rip type of stuff. But if you look at where the stock was in July, it hasn't gone anywhere since July, and that's the view that I kind of take. So what I find, I'm going to talk a little bit about like this market right now, and it's a bit tricky because the names that were doing super well yesterday didn't really get much follow through. And it's going to be interesting with some of these earnings reports. Some names did well for earnings. So if we go through our earnings list here, where do I have the earnings list here? Here we go. So names that are down. ServiceNow is down about 8.7%. Let's see if they come in and buy the dip. I did see that rebound a little bit, but I think it's moved back down. Their conference call is going to start very shortly. And you could see Salesforce is down, ESTC, Snowflake is down, MDB, Zscaler. These were all the names. And they were already down today. So just not getting like a ton of follow through from day to day. But I think also patience is required. IBM is up 8.6%, Las Vegas Sands. So you basically have some names up, some names down. I think there's a little bit of a slant to more names down. Let's see if we look at some smaller companies too. Thought I saw CLS was up here, but maybe not. I don't know why that name is not coming up there. And there's some of your names that are down. So let's talk about where we are, because I think the overall market is kind of looking for a little bit of direction here, right? We've come right back, right? So, we've went down this month, we've went up, we've went down. I guess if you really like, fading things, this has been a good month to do just that. We're sitting here right now inside the value area for the month. We can start to see the February value area, which is based on all of January's activity. So that's not complete yet. We're still waiting on we got a couple more days of January to go. But the levels that I talked about in yesterday's video pretty much have stayed constant here. Notice the 604.37 level. This is something that I tweeted out yesterday afternoon. I tweeted out again. So we've made this nice bounce, but we kind of ran out of steam for now. Now we could just be backing and filling. And I think what you really want to see is you don't really want to see SPY lose 601. If it does, then probably you're going to want to see this moving average kind of catch up here. All right, so I use volume at price, and that's the value areas, and then I use some of the moving averages too. You know, and I think mainly if we do, again, we gotta have to look at both scenarios because we're kind of trapped in the middle right now. We're trapped in the middle between the low of this week, right? And I would want to see if we do come down, see us make a higher low, and we're also trapped between the highs of the week, and 604.37 is the main level there. Qs are going to be a little bit different looking, but this is also tough too. There's just not much. And I know everybody wants to make predictions, but I don't know how you can really make too much of a prediction with this chart right now. We're inside the value area for the month, but we're above the 50 and the 20-day moving average, but we're below the 5-period moving average. So we're holding firm, but we're also not doing anything crazy to the upside. And IWM continues to really not do much. Even though it normally moves a bit, it moves more. That's why I usually put on some type of a trade for IWM on Fed Day. I didn't do that because I just didn't know what Powell was going to say. I didn't think he was going to be super hawkish, and I didn't think he was going to be dovish either. So if you didn't trade options today, you did a good job because you're just going to lose on the vol crush on a day like this. But this is still underneath the 50-day moving average, which is starting to kind of move lower. But this is a tough one. Just to look at a couple other charts here, RSP. Notice that this kind of came, has also been settling in here, but right around this 50-day moving average. One shining light for the day on the positive side was Bitcoin. Bitcoin moved up today. Bitcoin futures, I think that's 4.4% that I see. That's a nice move now, holding above the value area. Still kind of digesting or consolidating here, but nice to see it get back above that 5-period moving average. Hood has been very strong and got back above its 5-period moving average. So I like this name. I was also watching the financials today because they've been one of the strongest areas of the market, but they stalled out. Right. So again, you have to be patient here. This didn't lose the 5-period moving average, but certainly didn't do much. Morgan Stanley was a name that I traded right off the bat today. But look at the fade that went on here. A lot of fades. I was able to take a target, and then I added that target back. So we'll see if this can get moving a little bit above, the last earnings move up over here. So I'm going to keep it kind of short because the video is going out a little bit late because I don't know why Microsoft was so late with their earnings, but they were. And we'll leave it there. But I think overall, this is a choppy market that we're dealing with. And you got to be careful, in my opinion, about where you're setting, where you're starting your trades. I will try to stay committed to basically if I start a trade during the day and if it doesn't look like it's doing very well, I will probably take it off. I don't want to be in a situation where I'm accumulating positions here. Want to be kind of lean, going into month end and as well as start of the new month. And again, when things get choppy, right? It's for me, it's not a time to be like adding a ton of risk. It's to be really monitoring what you have on, right? And running a little bit leaner until the market kind of figures out the direction and goes with it. That's it for today. Have a great night, guys. See you tomorrow.